The Bank of Canada has raised interest rates for the 10th time since March 2022, and it's starting to feel like the Toronto real estate market is sinking. In this video, I'm going to give you my thoughts on the announcement. I'm going to let you know what I'm seeing on a ground level from a realtor's perspective, and I'm going to give you my short-term predictions for what I think the real estate market has in store for this summer, so that way you can decide whether to abandon ship or stay on board. What's going on, everybody? My name is Demetres Giannitsos. I make educational real estate content and I'm a real estate agent here in Toronto. So if at any point you want to reach out to me and discuss your specific situation, I've left some links down in the description below where you can book a call right into my calendar. And if you're liking the channel, feel free to subscribe and turn on your post notifications so you don't miss any of my posts. So let's get right into it. Yesterday, the Bank of Canada increased the key rate another 0.25% to a 5% total, which I don't think it was a huge surprise to many people. Some people were wondering if they were going to pause again, but they decided to raise rates. And I mean, if you go on Twitter, you know, people are pretty upset about it, which rightfully so, totally get it. But, you know, some people are actually happy about it. They think that, you know, them raising rates now will save us, you know, from having to drag this out into the future. So I'm really curious to hear what you guys have to say about it. One of the best things about social media is that we got to start lots of conversations and hear tons of different perspectives. So make sure you leave a comment down below. Let me know what you think of their decision to raise rates yesterday. Now, I'm not going to get into it too much as to why, you know, they decided to raise rates. I mean, I think that they're really trying to send a message to Canadians to just kind of get everybody to cool down with spending, you know, try to get inflation back on track. And I almost like to use the analogy of like gas prices, right? You know, when gas prices go up, everybody is super cautious about how much they're driving. You know, maybe you turn off the air conditioning or you put your car into eco mode and you're very light on the pedal. But eventually, you know, you adapt to these new prices and then, you know, the AC goes back on, you put it into performance mode, maybe you put the pedal to the floor more than you should, and everything goes back to normal. I feel like that kind of happened with these increases. They increased rates. You know, they even paused rates for a little bit. The real estate market took off this spring. And now they're like, okay, guys, you adapted to, you know, our increase in interest rates. And now it's time to kind of give you another reminder that, hey, you know, these increases could continue and they might be here for a little bit longer than expected. And me personally, of course, I don't love the idea of higher interest rates. No one does. I've got a mortgage that I've got to pay as well. But I look at it and I'm like, if we need to increase rates more to kind of shock the system and get everything to cool down, if it's going to get us to, you know, back to the 2% quicker than dragging this out and slowly increasing rates and people adapting and then just having to really drag this out for an even longer amount of time, I'm here for it. I'm here to do whatever we need to do to get things back on track. Like I kind of alluded to earlier, I think that this announcement was more of a send a message than it was, you know, anything else. 0.25% increase is an increase of about $15 on every $100,000 that you have owing. So it's not a massive increase. And in terms of the actual numbers and the affordability of homes, it's already quite high. I don't think a 0.25% is really going to make a huge change. But what it does do is it kind of plants that seed in everybody's mind that rates are going up. And if you watch the announcement, they almost kind of left some of their questions open-ended and alluding to the fact that there could potentially be more interest rates coming. So I think their goal was to really just send that message. So for this summer, what do I personally expect? I do think that sales are going to slow considerably. I did see some data for the month of July, and it's already showing a pretty big taper off in the number of sales. As for prices, prices could go down as well. I know that this announcement came out yesterday and I saw a handful of price reductions from desperate sellers who are trying to get ahead of the market because they need to sell. They know this announcement came out, they know people are spooked, and they know that they need to give them a good deal in order to move the property. So I do think that prices will go down. Do I think they're going to crash? I don't think they're going to go down that much, but I do think that there are going to be some massive opportunities for anybody who is willing to, you know, put their money forward. If you know your numbers, you're comfortable with it, the rents are high, and if you're looking to get into a property, I think that there's going to be some amazing buys this summer. And I already know what you're saying. You know, Demetres, why don't we just wait until the bottom of the market before we buy our home? Okay. And I totally get it. I get where you're coming from. Of course, everybody wants to buy as low as possible. The fact is that we don't know exactly when that will be. And if we learned anything this year, it's that market sentiment is everything. And that it's crazy to me that people can't see more than a few months in front of themselves when they're making huge real estate purchases. But the second the Bank of Canada paused the rates, the spring market took off. It was business as usual. People adapted to higher interest rates. We saw, lots of upward pressure on prices. And in some cases, prices almost got back to where they were in the peak in 2022 before they started raising interest rates. So with another announcement coming in September, depending on how that goes, is really going to show us what the end of the year is going to shape out like. If they decide to pause rates in September, well, the fall market could be pretty aggressive. We know that there's a lot of people who want to buy. People still have money that they're willing to spend on real estate. But if they increase rates, it's going to put a little bit of doubt in buyers' heads, and it could be a slow end of the year. I will also say that there was some positive in this announcement too. Looking at where inflation was last year at 8.1%, we're back down to 3.4%, which I think is huge waves. But you can tell that the government of Canada does not want to get stuck at that 3% mark. They really want to push it down, get back to that projected 2%, and get things under control. And one other thing that I thought was really important about the announcement yesterday, and actually I would say this is probably the most important thing that I took from the announcement, was that they don't expect to get inflation back down to 2% until mid-2025. Originally, they said that it would be the end of 2024. Now they're extending it another 6 months. So for those of you who are wondering, when you can expect interest rates to start coming back down, they're going to be here for the next few years. And I would expect that they actually keep the interest rates higher even after we hit that 2% inflation mark, just to let things settle and stabilize. So if you feel like you're treading water right now and you're really feeling the pinch from these interest rates, it's time to really evaluate and look to maybe scale back your lifestyle or look at your assets and see what moves you can make, because it looks like these interest rates are here to stay for the foreseeable future. It's definitely not the news that anybody wanted to hear, but for the Bank of Canada, it might be a necessary move to get things back under control. I'm going to be really curious to see what happens on September 6th at the next announcement, because I think this announcement is really going to set the pace for what things look like to finish out the year, as September 6th is traditionally the start of a really busy fall market. I'm curious to hear what you guys think is going to happen over the next couple months down in the comment section below. As always, thanks for watching, and we'll see you on the next video.